Hey, Matt the Mortgage Guy here. I'm going to record a quick video, and I just really want to speak to the self-employed borrowers trying to get a home loan in 2020, going into 2021, the real hard truth about what it takes to get a home loan as a self-employed borrower. Now, my point with this video is to be as straightforward and honest as possible. I feel like in the lending world, sometimes that's just really not what's given. And so as I do with anybody who gets referred to me or anybody who finds me online and gives me a call, I'm going to tell you exactly how lenders are looking at self-employed borrowers. Whether that's right or wrong, I'm not going to say, but this is what is going into underwriting self-employed borrowers in 2020. As we all know, 2020 has been a crazy year. Different states have done different things. There's been mandatory shutdowns. Businesses have been affected across the board, some more than others. Some businesses actually been positively affected and are doing better than they have in past years. Some businesses have been completely shut down for months on end. Some have come back and opened, but it's really unclear to a lot of people, and I think there's probably some bad info out there. So this video is meant to probably dispel some myths and really just give you an honest assessment of, if you're self-employed, can you get a home loan? The end of 2020, beginning of 2021, what's to come and what to expect. So without further ado, I made a prior video in June of 2020. Fannie and Freddie, who write the guidelines that all lenders have to follow, they came out with, their guideline, which lenders had to interpret and had to basically abide by when they're underwriting your loan. And what that said was, if you're self-employed, you provide a 2020 profit and loss statement that says how much your business has made. And that shows your net income after all your expenses, just like your prior tax returns do. And so you can self-prepare that and turn that in, and also turn in 2 months of business bank statements. What lenders did and what the guidelines said, if that didn't jive, or if the underwriter didn't get the warm and fuzzies or couldn't tell, okay, things look good. We've got your 18, 19 taxes, and this 2020 profit and loss shows that business is still going smooth. Your bank statements reconcile that. It shows about what you said in the profit and loss is coming into the bank account every month. So you're all good, proceed. If they didn't, if they said, well, your year-to-date shows 88,000, but over here in your bank statements, you've only had 4,000 a month in deposits, that doesn't reconcile. What they'll ask for is an audited P&L. Now, I know from working with hundreds of self-employed borrowers, it's not always easy to get an audited P&L. Your CPA, your accountant, have them give something like this or do something like this is costly. It takes time, and sometimes, frankly, accountants just don't want to do it. So that's been a real hurdle and roadblock for self-employed borrowers. And so what I'll tell you is that I've seen dozens of self-employed borrowers roll through. If your business is operating, if it has been operating, if it's just as successful as it was in 2019, all we have to do is prove that, and you're fine. But if your business was shut down, if you own a restaurant, if you're a hairdresser, and I'm speaking to people in California, that's where I lend, so I know for certain these industries were affected, and affected in a major way. If you're driving for Uber or Lyft, and you had a big break in your employment, and your 2020 numbers are nowhere what they were in 2019 and 2018, it's going to be really hard for you to loan. And it's hard to stomach sometimes. And if you're in the market for a home, you've got a down payment, you've got great credit, and you're able to pay, it can be hard to hear. But I really have been advising more and more self-employed borrowers who had a major gap, who I know for certain, after looking at a profit and loss, after talking to them and seeing the recent bank statements, that you just probably want to wait. And if you get back in the swing of things, business is booming, and 2020 tax returns get filed, and it's on pace with 2019, or you're back to where you're making per month on paper what you need to qualify, all good. Purchase then. And really, I think it's important as mortgage advisors to present people with this honest and truthful information and not try to put a round peg in a square hole and say, yeah, let's try to get it through. Have you as the borrower spending money on inspections, appraisal, when it's highly unlikely that a lender is going to approve a loan right now. Because let's be honest, there's going to be homes for sale in January, February, March, April, forever there's going to be homes. And so, trying to buy when it's going to be really difficult to prove that your income wasn't affected is a mistake for a lot of people. And so that's what this video is about, just some straightforward information. There's certain lenders out there. As a broker, I get to see a wide variety of lenders, and they interpret rules different ways, and they're able to do different things. In this case, for self-employed borrowers, every single lender I'm working with is being really strict. You've got Quicken Loans who put out a bulletin last week that said they want a 780 credit score and higher. Now that's a ridiculous overlay. And what it is basically saying is we don't want self-employed borrowers. That's what that's saying. Other lenders are looking at 18, 19, and 20, and they're taking the worst case scenario, or the worst of 18 and 19 and 20 year to date. They can take an average, or they can look at 2020 alone, and they'll take the worst, meaning that if your average for 18 and 19 and the year to date was $7,000 a month, but year to date this year you're only making $3,500 a month, they're going to take $3,500 a month, and that's what they're going to give you. Or if you're having a boom in 2020 and things are great, they're going to say, no, we'll take the average of the prior years and that. And so really, they're being strict, and it's across the board. It's not like one lender's being strict and another lender says bring them on. What I will say about self-employed borrowers, I'm self-employed myself. I have a special place in my heart for self-employed borrowers. I think that when push comes to shove and when times get tough, self-employed borrowers are the ones more than anybody. They're going to find a way to make it happen and find a way to make their mortgage payment. It's just not viewed that way by any lenders because there's just uncertainty. They don't know if you're in a certain type of business that has seen 2 or 3 months of shutdowns in 2020, whether that's going to continue, whether that's going to get better or worse. And so they're just, defaulting with being super strict. And if you work for the state of California and you've got a W-2, that's super simple for an underwriter to say, you make $72.31 per month, this month, next month, the month after. As a self-employed borrower, you had some time off, but you're back, and you write a strong letter that says my business is booming and we're fully open and I plan to make even more than I made in 2019. It's just, unfortunately, something that you'll have to prove. You'll have to prove, in a very strong fashion from what I've seen. So that's all. If you have any questions at all, please feel free to reach out. I'm happy to chat with you. And as I do on this channel, and as I do for anybody who gets referred to me, I'm going to give you the most honest advice I can. For a lot of self-employed borrowers right now, that honest advice is I'd probably just wait. I talked to a few people just over this past weekend that missed some time in 2020 because they were shut down, because the state of California told them they could not work, and that's affecting how they look on paper, their profit and loss. Has nothing to do with them wanting to work or them wanting to get out there, but unfortunately, the year-to-date profit and loss is going to show it. The last 2 months' bank statements are going to show it, and that's what lenders need to see. So hope this video answered all your questions. If you have any further questions, drop a comment down below or go ahead and shoot me an email, matt, M-A-T-T, @mattthemortgageguy.com. Thanks for watching.